In today's show, war puts the Bitcoin price to the test. I'll be sharing with you the 5 things to watch out for in the Bitcoin market this week. And as Bloomberg analyst Mike McGlone shares here, down about 4% on Sunday from Friday, Bitcoin is indicating a rough week for risk assets. And as pointed out here, Bitcoin is currently sitting exactly at the high profile point of control for the last 15 months. This is the level where most Bitcoin is traded, and as Mikhail Van de Poppe shares, when it comes to Bitcoin, the playing field seems quite simple. Consolidation happening after a bullish move during the past week. If you truly want to see more momentum, then the correction shouldn't be that deep, so 38,100 to 38,200 must hold. Then we could be going to $44,000. Also, this just in, a record 76.5% of all Bitcoin has not moved in at least 6 months. And as Pentoshi shares here, in more positive news, 15 days until the Bitcoin volcano bonds for El Salvador. Looking forward to this part of history and being a part of it. Also in today's show, non-zero Bitcoin addresses hit an all-time high of 40 million. Also in today's show, Ukraine targets Russian politicians' crypto wallets as Russian banks are cut from SWIFT. That's right, the Vice Prime Minister of Ukraine shared the following on crypto Twitter. Ukrainian crypto community is ready to provide a generous reward for any information about crypto wallets of Russian and Belarusian politicians and their surroundings. War crimes must be pursued and punished. And he also goes on to share, I'm asking for all major crypto exchanges to block addresses of Russian users. It's crucial to freeze not only the addresses linked to Russian and Belarusian politicians, but also to sabotage ordinary users. And Jesse Powell, the CEO of Kraken, responded, I understand the rationale for this request, but despite my deep respect for the Ukrainian people, Kraken cannot freeze the accounts of our Russian clients without a legal requirement to do so. Russians should be aware that such a requirement could be imminent. Hashtag not your keys, not your cheese. Also in today's show, Kevin O'Leary, aka Mr. Wonderful from Shark Tank, reveals what will drive the Bitcoin price to $300,000. Quoting him here from a recent interview with Stansberry Research, you want to talk about Bitcoin going to $100, $200, $300,000. It's going to happen when institutions can finally buy it. And he also goes on to add that Bitcoin itself would have to be compliant if these institutions are going to invest in it. And when they do get that go ahead, the price of Bitcoin is going to appreciate dramatically. Also in today's show, we'll be taking a look at the overall crypto market. As you can see, Bitcoin, Ether, and many of the major alts are correcting and in the red. But where's the Bitcoin price likely to go next? Find out all this, plus so much more, in today's show. Here at Crypto News Alerts, I drop a brand new episode every single day. The goal is to get to 100,000 subs, along with a $100,000 Bitcoin price. If you like getting that crypto, be sure to smash that subscribe button and ring that bell to turn on all notifications to receive daily premium Crypto News Alerts every single day, just like this. And today's episode is brought to you by BlockFi, the #1 leading provider of financial products and services for crypto investors. And right now you can get up to $250 in Bitcoin when you buy crypto or fund your account today with BlockFi. Be sure to use my referral link in the description right down below. Right now, there are more than 500,000 people and 350 institutions globally using BlockFi to manage over $10 billion in assets. And here are some of their flagship products, which includes their trading platform, where you can buy, sell, and trade the top cryptocurrencies. You can do instant trades with ACH. You can trade 24/7, 365. Another flagship product I love is their BlockFi Bitcoin Rewards Visa credit card, where you can earn an unlimited 1.5% back in Bitcoin on everything you buy. There are no annual fees, no foreign transaction fees, and you can see if you're approved with no impact to your credit score. Also like to point out, for your first 90 days, you're actually going to earn 3.5% Bitcoin back on all your purchases, truly making this a no-brainer. So go ahead and click my referral link in the description right down below to get up to $250 in Bitcoin, and let's start stacking those sats, shall we? All right, welcome back to another episode of Crypto News Alerts. I'm your host, JV. How's it going, crypto fam? Make some noise in the live comments right down below. Now for the 5 things to watch out for in the Bitcoin market this week. #1, Ukraine war dominates. That's right, it goes without saying that the Russia/Ukraine conflict is the main driver of market performance this week. The situation, having only arisen in its current form just 5 days ago, remains in a state of constant flux. Sanctions keep coming. Both sides and their allies continue to knuckle down as the markets react to new threats and probabilities. Chief among them is Russia's economy, which is bracing for turmoil on Monday. Stock trading has been pushed back to at least 3 p.m. local time, and the prognosis is bleak for its currency, the ruble, which is already trading at record lows, and talks are scheduled to begin on Monday, and any glimmer of hope could cause an about turn in the short-term outlook and thus change the face of the markets. While uncertainty rules, everyone will be looking for the ultimate safe haven, which is Bitcoin's use, whether by ordinary Russians and Ukrainians or by their governments, which is already a great talking point. Now, Ukraine's army has already raised millions of dollars in crypto aid, and far-reaching sanctions against Moscow could yet facilitate a pivot to Bitcoin as an economic tool. Now, the idea has not passed the establishment. We have Deputy President of Ukraine called on exchanges to block Russian and Belarusian users' funds, and Preston Pish responded to some of the madness with the following: remember this tweet when the mainstream news tells you Bitcoin is evil because Russia is using it to bypass sanctions. Bitcoin is like a knife to a surgeon or a knife to a criminal. Like any valuable technology throughout time, its value comes from the intention behind its use. And he makes a great point. Now, markets, meanwhile, will likely be driven depending upon shifts and events on the ground and knock-on effects for governments. And as shared in this chart, you can see the Russian oil prices literally tanking, while non-Russian oil has been one of the beneficiaries of the war, while Bitcoin has managed to remain fairly stable, unlike gold, which first gained rapidly and then lost all of its newly won ground. Now, for the second factor to keep your eyes out on this week in the Bitcoin market, the Bitcoin spot price action faces macro force majeure. That's right, with traditional markets poised to be extremely volatile on their respective Monday opens, guessing how Bitcoin will fare on the shortest time frames is the real problem. Correlations aside, Bitcoin has so far managed to remain in a fairly tight range, and $40,000 is a clear resistance zone for the bulls to beat. The problem, however, is that any more dramatic moves could ultimately come as a result of major macro changes and thus be an unreliable longer-term signal. And as shared here by Bloomberg analyst Mike McGlone, down about 4% on Sunday from Friday, Bitcoin is indicating a rough week for risk assets. And popular Twitter account Decode Jar, meanwhile, noted that the current levels represent the so-called point of control for the past 15 months, with $38,000 seeing large volumes relative to other price points in that current range. And as Tor Demeester shares here, remember the March 2020 Bitcoin crash, negative 82% from the 2017 high. In my opinion, unlikely to reoccur, but it could if another macro shock comes around. I psychologically prepare by imagining absolutely sitting tight while the market repeatedly punches me in the face. And he shares this crypto greed and fear index back from March of 2020, where you can see we were in extreme fear at a 4, which is the lowest I've ever seen it. Now for the third factor to keep your eyes out on this week in the Bitcoin market, another month, another red candle. That's right, Sunday's close did not really go according to plan for the Bitcoin market. A last-minute dive took away the chances of closing the week and the month above 38,500, and thus gave the history books their first fourth straight monthly red candle since the 2018 bear market. Already an unexpected come down. Last week's events appear so far to only be making things worse for Bitcoiners who have yet to see the crypto branch out on its own away from traditional assets. Also causing a headache for analysts is the monthly chart relative to its 21-month exponential moving average, which could be apt to disappear as support should losses continue. The 21-week EMA being broken has been a common feature of macro bear trends for Bitcoin, with February mercifully avoiding a repeat performance. Now for the fourth factor to keep your eyes out on this week in the Bitcoin market, difficulty steadies the ship. That's right, turning away from geopolitics, investors have every reason to keep faith in the strength of the Bitcoin network. Despite price pressures and uncertainty on practically every time frame, miners keep mining and the hash rate and difficulty have kept climbing, which is definitely a bullish indicator. This week may see a challenge to the status quo. The hash rate is steady, but the difficulty is due to decrease for the first time in 12 weeks to take the latest changes into account. This is nothing bad as a phenomenon. The 1.25% decrease is modest by Bitcoin standards and likely reflects circumstantial changes and minor participation rather than the start of a new trend. And according to monitoring resource Mining Pool Stats, the hash rate for its part remains above 200 exahashes per second, a sea change from even a matter of months ago when Bitcoin hit its all-time highs. Now, the divergence of fundamentals from the price has been extensively covered over the past year. Historically, Bitcoin price follows the hash rate. Do you think that will happen likely again this time? Let me know in the comments right down below. Now for the fifth and final factor to keep your eyes out on this week in the Bitcoin market, sentiment predicts the worst. That's right, Bitcoin, true to its mantra, does not seem to have liked the emergence of a new armed conflict In Europe, its potential rolls aside, the largest crypto is not enjoying a sentiment boost as a result of recent events. Checking out the Crypto Greed and Fear Index right here. We're back in extreme fear with a 20 out of 100 for today. Yesterday was a 26, last week a 25, and last month a 24 in extreme fear. And before I break down next story of the day, non-zero Bitcoin addresses hit all-time high of 40 million. But first, let's take a quick look at the overall crypto market. As you can see, Bitcoin down almost 3% for the day, trading just above $38,300. We have Ether down 6%, trading just above $2,600. Polkadot down 8%, trading under $17. We have Luna down almost 2%, trading above 75 bucks, and XRP down 4%, trading just above 72 cents. But all right, now let's break down our next story of the day. On-chain statistics throughout February have suggested positive sentiment for Bitcoin as addresses with non-zero balances of Bitcoin reached an all-time high. And additionally, those wallets with a positive BTC balance are increasingly holding their coins. The amount of Bitcoin circulating supply last moved between 3 to 5 years ago reached a 4-year high of just over 2.8 million Bitcoins, according to data from on-chain analytics firm Glassnode. As they share here on Twitter, Bitcoin number of non-zero addresses just reached an all-time high of 40,276,000. Previous all-time high of 40,275,000 was observed on the 5th of February of this year. Now, the number of addresses with a non-zero balance was on a steep increase through 2019 and 2020 until the middle of 2021, when growth appeared to have plateaued at about 35 million addresses. However, growth in this metric has spiked since the beginning of 2022, leading to a new all-time high of 40,276,000, according to Glassnode. Now, the sudden spike in Bitcoin supply that was last active 3 to 5 years ago coincides with the peak of the last extended bull market at the beginning of 2018, which you can see here in this chart. It shows you the Bitcoin amount of supply last active 3 to 5 years ago. And among the addresses with a non-zero balance, Glassnode reported that 817,445 of them have at least one whole Bitcoin, a 10-month high on February 28th. Now, supply-side dynamics in Bitcoin have provided several metrics of note this past month. FS Insight reported on February 9th that 75% of the Bitcoin circulating supply was illiquid because it did not move for an extended period of time. The financial research firm's report described the situation as a powder keg that is ready to blow as soon as moderate amount of Bitcoin is bought onto the market. And political turbulence in Canada and in the Ukraine in February also shed more light on Bitcoin's ability to remain censor-proof. Some Canadians have adopted Bitcoin to protect their funds for being frozen, while the Ukrainian government is now accepting BTC donations as tensions escalate in the region. That's right. And before I break down next story of the day, Ukraine targets Russian politicians' crypto wallets as Russian banks are cut from SWIFT. But first, let's take a quick look at the overall crypto market cap, sitting just above $1.7 trillion with about $88 billion in volume in the past 24 hours. The current Bitcoin dominance on the rise at 42%, with the Ether dominance at 18.2%. And checking out the top 100 cryptocurrency gainers for the week, we have ANC up 54%, Luna up 53%, Waves up 33%, and AR up 22%. But all right, now let's break down our next story of the day. Authorities in the capital city of Ukraine have issued a call on social media for information about crypto wallets controlled by politicians in Russia and Belarus. On Saturday, Ukraine's deputy prime minister announced on Twitter that the country's crypto community will reward those who provide details leading to their identification. As he shares here on Twitter, Ukrainian crypto community is ready to provide a generous reward for any information about crypto wallets of Russian and Belarusian politicians and their surroundings. War crimes must be pursued and punished. To share info, please contact in Telegram. Then the following day, he shared, I'm asking all major crypto exchanges to block addresses of Russian users. It is crucial to freeze not only the addresses linked to Russian and Belarusian politicians, but also to sabotage ordinary users. And Kraken CEO Jesse Powell responded, number one, I understand the rationale for this request, but despite my deep respect for the Ukrainian people, Kraken cannot freeze the accounts of our Russian clients without a legal requirement to do so. Russians should be aware that such a requirement could be imminent. Hashtag not your keys, not your cheese. And he continues, number two, that requirement could come from your own government, as we have seen in Canada in response to protests, bank runs, and attempts to flee the country. It could come from foreign states like the U.S. as a weapon to turn to the Russian populace against its government policies. Number 3, for what it's worth, I would guess that the vast majority of crypto holders on Kraken are anti-war. Bitcoin is the embodiment of libertarian values, which strongly favor individualism and human rights. In Canada, crypto is the only financial rail left for those who oppose the regime. Number 4, our mission at Kraken is to bridge individual humans out of the legacy financial system and bring them into the world of crypto, where arbitrary lines of maps no longer matter, where they don't have to worry about being caught in broad, indiscriminate wealth confiscation. Number 5, sometimes the hardest thing about having power is knowing when not to use it. Our mission is better served by focusing on individual needs above those of any government or political faction. The people's money is an exit strategy for humans, a weapon for peace, not for war. And he concludes with number 6. Besides, if we were going to voluntarily freeze financial accounts of residents of countries unjustly attacking and provoking violence around the world, step 1 would be to freeze all U.S. accounts. As a practical matter, that's not really a viable business option for us. Now, the rewards will be funded by private donations, according to Artem, a lawyer managing the effort, quoted by Bloomberg. He said the campaign has already received tips matching political figures with crypto addresses. The plan is to share them with major exchanges and the blockchain forensics firm Chainalysis, which has been monitoring Russian transactions. The lawyer stated, "We want them to understand that they are not welcome in Ukraine or in crypto." Now, another report has revealed that several trading platforms have imposed restrictions for users based in the Russian Federation. The Ukrainian crypto exchange Kuna told Forklog it removed all pairs with the Russian ruble and stopped deposits and withdrawals. Whitebit rejects new registrations from Russia, while CEX.io is not accepting or serving customers from Russia, Belarus, and the Ukraine. Now, the government of the capital city in Ukraine has been urging for stronger sanctions against Moscow in the face of advancing Russian forces. The initiative to blacklist wallets owned by Russian politicians comes as Ukraine itself resorts to using cryptocurrency to finance its defense effort. Now, since the start of the invasion, the country has raised more than $17 million in crypto donations. Meanwhile, the United States, Canada, the United Kingdom, European Commission, and several EU member states, including France, Germany, and Italy, announced their commitment to remove selected Russian banks from the SWIFT messaging network for interbank payments. Quoting them here, "This will ensure that these banks are disconnected from the international financial system and harm their ability to operate globally," their leaders said in a joint statement released late on Saturday. Now, the tightening of Western sanctions directed as isolating Russia from global finances has raised concerns amongst analysts that Moscow may turn to cryptocurrency in order to circumvent the mounting restrictions. Russian institutions have been actively working to regulate crypto transactions, and the Ministry of Finance recently submitted a new bill to the federal government. So there you have it. The Bitcoin game theory continues on. Do you feel that Russia will adopt cryptocurrencies to circumvent being blocked by SWIFT? Let me know your thoughts in the comments right down below. Now let's break down our final story of the day. Bitcoin price predictions abound through bull and bear markets. In recent times, there have been numerous optimistic price outlooks for the digital asset, while putting it as high as $200,000 before the end of the year. In fact, Max Kaiser still says $220,000 still in play. Now, the growth of crypto throughout the recent years, which has been compared to that of the internet, but on a much accelerated timeline, has been the major push behind these predictions. However, Shark Tank superstar Kevin O'Leary, aka Mr. Wonderful, proposes another fact that will drive the asset above this point. That's right, millionaire investor Kevin O'Leary, who is a prominent figure on the popular show Shark Tank, recently shared predictions for Bitcoin and what he believes will drive the digital asset to that point. Following the school of thought of many who have large price predictions for crypto, O'Leary stressed the importance of institutional money coming into the market to drive the prices up. That's right, a spot Bitcoin ETF is yet to be approved in the United States. However, we have a futures ETF, which makes no sense but manipulation by the SEC to suppress the crypto price. Now, up until now, institutional investors are still unable to purchase Bitcoin or any crypto for that matter directly due to regulations by the SEC. These institutional investors who may not be able to invest in the digital assets themselves have taken to invest in adjacent products like ETFs and the likes. However, O'Leary explained that when they are finally able to purchase the assets themselves, it'll be the catalyst that drives Bitcoin's price up. I agree 100%. And talking to Stansberry Research last week, the Shark Tank star revealed that not a single institution holds Bitcoin on their balance sheets. And this is due to the regulations. These institutions, which include sovereign wealth funds and pension funds, are unable to buy Bitcoin directly, and they are not going to until their compliance department allows for ESG mandates, O'Leary said. And he shared the following: you want to talk about Bitcoin going to 100, 200, $300,000? It's going to happen when institutions can finally buy it, the millionaire added. However, he also noted that Bitcoin itself would have to be compliant if these institutions are going to invest in it. As he shares here, when they do get that go-ahead, the price of Bitcoin is going to appreciate dramatically, O'Leary concluded. Now, this aligns with the thoughts from other prominent players in the space, including ARK Invest Cathie Wood, who comes to mind when the issue of institutional money in the market comes up. The CEO had explained that Bitcoin would rise as high as $500,000 per coin in the next 5 years, but noted that this would be predicated by institutional investors putting just 5% of their holdings into Bitcoin. And you do the math. What if they were to put 10%? We're talking about a $1 million Bitcoin price. Now, O'Leary is also quoted by saying there could be another $1 trillion pouring in to buy Bitcoin when financial services companies are able to call Bitcoin an asset and put it in an ETF. This money, which would come from institutional players, would push the value of the Bitcoin price even higher. So there you have it. When do you feel a spot Bitcoin ETF is finally to be approved in the United States, which can send the Bitcoin price soaring to $100, $200, even $300,000? Let me know in the comments right down below. Now for the top 3 comments from yesterday's episode, Chris Minka wrote, I agree with Pomp. The value of Bitcoin is there for anyone with intelligence and honesty to see. Astrology bears can't see this because this is the future, not the past. I am not a Bitcoin maxi, but I am close, so I see it this way. You got Bitcoin, the undisputed king. ETH may be second, and you can gamble for the unicorn. The world is too crazy to gamble for unicorn crypto or fiat gains. I'm only buying Bitcoin now for the foreseeable future. BTFD when you can hodl, or you're crazier than the world is. That's right, fam. All hail Bitcoin, the undisputed king. Hodl. Our next featured comment comes from Valentin Alba, who wrote, let's go JV, love your show, bro. Prayers out to Ukraine. Putin been tripping right now. Hodl, hodl. Much love, Valentin. Thanks for your support. And our third and final featured comment comes from our very own Inner Dino. Hello, JV. Hello, everyone. How we all doing? A big shout out to the people of Ukraine. Glory to Ukraine. Glory to heroes. Shout out to the people of the Ukraine and to all my Bitcoin hodlers. One love. And to be featured on tomorrow's episode, drop me a comment right down below.